Home prices have fallen in countless cities around the world now. There's no way to know how far they can go in this current environment. With interest rates rising, we have to assume a consistent slowdown, but only time will tell. Home prices at or anywhere near their current levels are absolutely absurd and unjustifiable. Let's see what the Fed does in December. You came here for the truth, so let me unveil that for you. Today we are going to talk about real estate prices. I wanted to begin by taking a look at this out of the Seattle Times. Seattle home prices down $80,000 from their peak amid unprecedented spike in homes sitting unsold. This happens to be a very consistent pattern. You can see the same thing happening in areas of Canada, other cities in the US. We're looking at this on a global level. Of course, in Australia, we're seeing the same situation. Many other places, of course. This article gets into some further details, which I'll mention very quickly. The number of homes sitting unsold in King County has doubled in the past year as buyers continue to retreat from the once hot market, pushing prices in the city of Seattle down even further. What's interesting about Seattle is that a couple of years ago, we had in Canada, Vancouver or British Columbia puts in this new foreign buyers tax. Immediately, the search engine in China had a spike in real estate investment for Seattle. It's as if they just moved on to the next city. And we've seen a spike in that period of time. Of course, the same thing in Vancouver, we have seen a spike as well. But there was a slowdown, a very slight slowdown. We saw foreign investors shift their desires into another city. Because if you're a foreign investor, you don't care if it's Seattle, you don't care if it's Vancouver, you don't care if it's Toronto or anywhere else. If they make it too expensive for you, you're going to pay a tax, you're going to have to do this or that, jump through those hoops, go through the red tape, they'll just move to the next city. Now, foreign investors are not the only buyers. However, it does make a difference. Inventory countrywide jumped 86% among single-family homes and 188% among condos in October compared to a year prior. This is always the worry of any investor, particularly those who have got in pre-construction. They have to wait 2 years for the building to finish. They've put some money down already, and then the market starts to sink. So not only are they underwater, but now they are wondering, how much more of this can we take? Do we just walk away? Do we lose our deposit? And in a lot of cases, they end up doing that. There are more details in here, but essentially you can read all of them. What's important to note is that from the absolute peak, the prices have gone down $80,000, all right? Median home price. Home sales by submarket. All right, so in this particular map, if you go to that article, you'll be able to navigate through, but I just wanted to show you. It's probably most relevant for those who live in this area. You can see the darker the level, that's the percentage change in median prices. All right, so just to give you an idea of what that looks like. This is ultimately what I wanted to cover. Median sales price of houses sold for the U.S. And you see that number going up further and further. This chart goes from the 60s until today. And what's important is that median household income is about the same as in 1998. But the median price of homes has more than doubled. And you have to understand that the average individual feels that they can afford their home because they've financed it over a 30-year period. Hey, as long as I can make payments, I can afford it. And maybe you can. Maybe you can afford those payments. Is that the house you're going to remain in forever? You know, a lot of people that are buying homes today, maybe they're getting their first starter home. Maybe it's a condo. Soon they can outgrow that. Maybe the environment around them changes. Maybe their job changes. At some point, they may need to sell. And when they do, they will be overburdened by a higher price. They will be also overburdened by increasing interest rates. And that is another topic that I will discuss today. But essentially, our wages have not kept up with the median price. That's a fact. That is an absolute fact. And it gets worse every single year. According to Atom, ATTOM, they said this: we found that 30% of the population lives in a county where you need an annual income of at least $100,000 to buy a median-priced house. Now, this goes in line with the other things that I've talked about for real estate, how you need a certain percentage. I believe the number was 30% of your income needs to go toward your house. Most people pay a lot more than that. They're really, really underwater. And this right here tells us you need $100,000 to be able to afford the median price house. Now think about that. Median. When you have to look at the prices around, oftentimes, especially in a hot market, you're not going to pay that price. It's always going to be more. It's always more than what you thought it would be. Also have to factor in closing costs, and depending on where you live, there are fees associated with it, land transfer tax and other things that are all associated with moving, buying a house, and so on. Very quickly, 2 charts. Didn't want to get into the details. This is just showing you what's happening in Seattle right now, the prices. If you're located in this area or know this area, this might be relevant to you. I just wanted to make sure I showed it on the video so you could just pause it if you're interested. This year, October home sales in King County. Looking through here, you can see the details if you're also interested in that. Fed unwavering in message that interest rates will keep going higher. This is from the Federal Reserve. They had their meeting. Of course, they did not increase interest rates, but they gave the message that they will continue to do so. And it looks like December is going to be the time when they increase yet again. Regardless of the turmoil that was experienced in October, they're going ahead as planned. This is very, very worrisome to most of the population who needs this to continue at excessively low rates in order to keep their 7 shares of Amazon really high. Interest rates could hit a new decade high even if the Fed does nothing at its meeting. This article is before the Fed meeting, of course, but essentially what it's saying is that it's going to go that way regardless. Right now, looking at the effective Fed funds rate, I want to point out something. We can see that, something I've talked about before, by the way, in previous instances, you find, this is my crude drawing here, that it could never get to the same place it was before. How long it takes to get there, we don't know exactly, but it is never able to get back up to that percentage. And that percentage previously was, it's hard to tell on here, but I'd say about less than 5.5% on the Fed funds rate. Today, we sit at 2.19. I don't think it's going to get anywhere near 5% personally, but based on this chart right here, it's got to be less than 3%. Less than 3%. If it goes beyond that, it's a historical anomaly. It's a complete historical anomaly over the past 40 years. We'll see. We'll see how it all works out. But there's something else. And by the way, the reason I mention that is because, of course, the Fed funds rate obviously links in directly with mortgage rates. Fed funds target range upper limit. So the upper limit is 2.25%. As you can see here, it's between 2 and 2.25. Right now, it's actually almost there. They've pushed the boundary quite far. As I showed you in the previous one, it's at 2.19 as I record this. 2.19, getting very close. It's not at the bottom of that range. As we begun to see throughout their increases, they were being very hesitant to bring it up. But now, 2.19, maybe by December, we're going to be all the way up to 2.25. So they are really going up there. And I'm interested to see how the Federal Reserve is going to deal with this that's happening right now. It's not able to sustain itself this way because low interest rates have been the name of the game. Change in the number of millionaires by country. I just wanted to put this in here because individuals are going to have their lives changed. These statistics are going to be very different in the future, whenever that is. We'll find out. But I believe that these numbers include their own dwellings, their own homes. And that's going to obviously have a major impact on what's happening with their assets, with their whole livelihoods. Things are going to change because people are using their homes as an ATM. They've been pushing things to the max, and I think that's been a very big mistake. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education that you were not taught in school, that was kept from you in school on purpose, well then these 2 books have it all. You can actually see everything you need to. Go to the link in the description where they have a look inside feature. It's going to allow you to flip through the pages of the books to see if you like them. And if you're more interested in the audiobook version, you can get that at themoneygps.com.